Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Well, cheers to a new, nice and wide-rangy trading day. Retail trading team, this is Master coming to you live from Puppet Show Central with your routine briefing. My chat going here for all the dozens of you who will be attending today's briefing. I am really happy to have anybody who does show up. Thanks for watching. We're going to do the entire warm-up document together today. I was on a very important phone call most of the morning here, or most of the trading morning, I should say. So we're gonna go ahead and just do all of that live, get everything pulled up here, and we'll just do the entire process together today. So just kind of a recap of what we got going on. I'm going to minimize this part of the screen and show you my execution chart. All right, there we go. So, got a breakout going on here, sustained from yesterday, and we'll see what happens. I mean, this is no surprise, I don't think, to anybody. Technical Analysis 101, when you break out of a consolidation, you often have this significant extension of the move. Reversals are usually last 2 days, and you're seeing that so far today. So we'll see how the bulls treat that 4,200 area, and we'll go from there. I mean, I'm just playing Fabio, nothing really special going on, just taking the trades and letting it rip. So you see me closing at that 41.98. What you're seeing on the account here is one of the funded accounts I'm playing with. So that is a little different than the Fabio strategy. So just to clarify, that Fabio strategy is long from 87.75, and it will remain long until it either is kicked out by a trade of the opposite type or 3:59 Eastern today. So that's what we got going on there. Did I tell you I'm live from Puppet Show Central? I'm live from Puppet Show Central. So look at my script. I feel like that is important to remind everybody. And so that's what we got going on today there. So we're going to, like I said, we're going to do that entire warm-up together. So I'm going to go ahead and switch screens here, and we are going to have a nice little discussion. Okay, so overnight inventory. We had an interesting overnight. So you had that standard bull pennant, bull flag, inverse head and shoulder, whatever. You had that bullish looking consolidation that did complete beginning at about 3 a.m. So I forget what country that open is, maybe Europe. whatever that open is at about 3 a.m. I'm pretty sure it's Europe. It kind of led to that completion of the pattern right up into that 84, or excuse me, that 80 area right below resistance. My major resistance there was 85, and then you kind of saw that 84. No, 84 was the high. So excuse me. So right at that resistance, 84.75 was technically the high. If I want to be picky, didn't quite tag that, and you saw that sell off. We had a Fed speaker, I guess. I didn't see it on the calendar, but a Fed speaker decided to talk about what's really going on in the world, and the market pretended not to like that. 1 second, need a sip of water. The main thing I noticed when that was going on was you did not see much of an uptick at all in volatility. So what does that mean? That means that nobody really believed it, and I think that's why you saw that fake break below. Not a standard fake break as Fabio defines it, but definitely a break in recovery of the lows as my friend Adam Mancini defines it. So he's not really my friend; he barely knows I exist, but yeah. Anyways, so if we look at that overnight inventory, what does that mean? That's telling us that really it balanced out. So it kind of had that neutral type look, but what really happened there was you had that move from neutral to, let me see actually when these candles started completing. Actually, you know what? I thought that this move began a little earlier, so it really was that neutral and balanced. So really not much that's telling us about what was going to happen later in the day. You saw kind of the 10 o'clock news came out, and the bulls used that as a catalyst to move forward. So neutral balanced to start the day there. This, excuse me, in terms of the type of open we had, let me see where we were at 9:30. So 9:30 opened at about 67.25. You saw a bit of an open auction in that first 30 minutes, and then it extended. So again, you saw that choppy type look that the bulls kind of ignored and continued that breakout. So what is that consolidation telling us? Again, just bouncing out, probably correcting some RSI or whatever other overbought indicator one is looking at, and just waiting for that catalyst, which the bulls use to hammer it higher. So I'm not going to speculate on data. I leave the tier one boys and gals. I actually don't know the makeup of the team, but I leave it to them. And we're going to talk about that a little bit at the end of the briefing here, as we've been doing recently. So anyways, I digress. Looking at the TPO, we're going to go to the TPO chart as time goes on here. And right now, what do we got going on that TPO? You have what looks to be a developing double distribution. Second, let me close my door. The cat is using the litter box, so I do not like her to come in here after using the litter box. That's what we call a little too much information. But anyways, we do have that double distribution going on. Oh, it was actually my girlfriend coming home. It was not the hi Danielle. It was she wants everybody to know that she was not using the litter box. All right. So yeah, so I think we're going to have that double distribution look develop as the day goes on here. Again, watching that consolidation, and we'll go from there. So in terms of the past trend, clearly up. I'm going to go ahead and actually delete this because, as I said yesterday on the Twitter, I do want to focus on Fabio. I have the best data around that, so I'll kind of keep that on the sideline, like I said, and on Twitter. I'm going to reevaluate that at the end of the month, so we're just going to ignore that for now and fill in the expected move. So yesterday we did have the first day where we exceeded that expected move in several days, and what is important is going to be my featured statistic for today. One of them is that expected move outliers cluster, and so we're going to watch to see if that is the case today as well, and you will be seeing the results of that on this document at the end of the day, because we do have a Fabio trade, so that will be in the trade log at the end of the day here. So stand by, looking at our expected move numbers, 158 and 16.9. So okay, so 80, 40 are the edges of our expected move zone for today. So we're kind of right up against it right now on the SPX. This level here corresponds to that 80 level on the SPX. So we'll see if there's any type of rejection here. Looking for kind of that double top look on my execution chart. Let me double check. But I'll have to wait for some candles to print here before confirming or unconfirming, or whatever the proper grammar is around that. So that's what we got on our warm-up document. In terms of levels today, it's very simple. All I'm really looking at on the upside here is going to be that 4,200. I'm actually not even going to include that in the levels, because the way that I'm looking at this just structurally is we are in the middle of a breakout. So when we are in the middle of a breakout, I do not like to identify potential levels in case you see that melt up. I think it's much easier to be looking for a trade of the opposite type. Just again, keeping it simple with the levels, really looking more for those on the downside. So that first level is going to be our overnight low at about 41.61. Put that right there. 41.61. Next level going to be, I think, a very important level for today, which is going to be this 41.80 area, because you have not only the now top side of the trend line from really this entire consolidation. If you take it back all the way to the very beginning of the month, you also have that prior day high there as well. So 4180 is going to be super important, followed by 4184. So we're actually going to make this a zone to 84, and one more on the downside, just because I got to include that overnight low. We'll say a 41, or excuse me, that prior day low, 41.26. And as we descend here, really 35 to 40 again. So we'll say 35. Oops. 26. 41.35. I'll be shocked if we get to see these today, just based on what I'm looking at in volatility right now. Volatility is right at about our 1960 number. We're going to look at that in just a second and discuss the implications of that. So that's what we got for our warm-up today. I think it looks pretty good. So we'll move away from that into the actual price action portion of the briefing, starting with our TPO, starting with our macro. Okay, so next stop, my opinion, is going to be that red box. So just to clarify the levels for Mr. Red Box there, I gotta put it on a chart here. So that begins at 417.60-ish on the SPY. So we are getting rejected a little before that so far. Got rejected right below it. So we haven't quite touched it. Obviously, we don't have to pop into it. So we'll see. Again, this is delayed data on the SPY chart here. I really just use it mainly for the structural areas, so I see no point in paying for data that is not used. But yeah, so our high of day so far was that 417.53 area, and we are currently retreating from it with a seeming amount of strength, yet I think we're just kind of cooling off that RSI because we have not retested it. I think at least for that triple top look, they do like to retest those major levels. So we shall see what happens there. That's why I'm not really looking at that macro chart too much today. More focused on this TPO, which you can see value has moved up, and we're now kind of hanging out around that naked POC. That was my major level, about 85 area, and we'll see if we don't hold this level and continue higher from here. But really, I'm just going to go ahead and move this up. It's all noise outside of those levels that we talked about in the warm-up document. So really, before anything gets super spicy here, I'm going to want to see a loss of that 80 level. So in terms of TPO levels, you do have all the levels that we just discussed in that warm-up document, and perhaps more importantly, this single here as well, near the bottom of value at about 41.70-ish. But really, I think that our 41.61, 41.80 to 84, those two levels on that warm-up document are important enough to keep watching throughout the day and not really get involved in too much other noise. There's a bunch of junk down here, and there's a lot of optimism from bears that we may be finally hitting that overbought condition where we will have some rug pull, but that remains to be seen, especially with volatility where it is. So let's talk about volatility a little bit before reviewing. So I'm going to go ahead and, yeah, okay. So I just kind of was drawing this, I think it's called a descending wedge, from just kind of the general consolidation. I've been talking about it for weeks. It's been really hard. Not so much hard, but really volatility has not been very useful just because we're in such this super wide consolidation zone, that 24 to 1960 area. And right now we're knocking at the door of 1960. So why do I not expect a rug pull, at least at this point? Well, volatility is not showing you anything. In fact, it's about to break that major support. Obviously, we'll look for that break below and then a reclaim. Yet, I think that if volatility loses 1960, loses it with strength, and you just see it start to ride, well, the market's going to follow suit, and we're going to go deep to that 4,200 handle, in my opinion. So until volatility makes a statement, I am going to keep my bull hat on and play the move. Obviously, if we look at the 10-minute chart, let me make sure I didn't miss a trade. Yeah, obviously, as the day develops, I will look for that potential fake break. I will look for that potential double top. Yet, if the chart doesn't show it, I'm not going to be making crystal ball predictions, and I'm going to have to keep that bull hat on. Like I said, everything's telling us that the squeeze will continue. I don't know how high. That can change in an instant, but that's currently how that cookie is crumbling. So I'll add that level there. I'm going to add this to a warm-up document now. Remember, well, I don't know if you've ever read the mechanics, but if you have read the mechanics, once you have a breakout and you have a candle of the opposite type print, that leads to a creation of a new level according to my mechanics, and that new level is going to be at 41.94. So you'll see that on the warm-up document. And I will update that document. It's in the description of this video. It says warm up with me here. That's the document I'm talking about. As the day progresses, I will keep that updated for you. So just to review our major levels today, 61, we'll say 60. We don't have to be cute with our specificity. 60-ish, 80 to 85-ish, 95-ish. Simple look, and I think that will treat you well if you trade around those levels today. So we'll see what happens there, and if anything crazy does happen, I'll keep you updated on the Twitters, keep you updated on this warm-up document. Right now we're seeing that double distribution look, I think. That's the one thing I'm kind of looking at immediately here. And we will see what happens if that holds. So that's all I got for you on the tape action. So let's just cover some of those macro viewpoints I mentioned earlier from the Tier 1 Alpha lads and or lasses. So this is going to be a little choppy because I haven't written this down. There's actually a lot going on, so I'm just going to kind of read the major points as they arise. There's all kinds of good stuff out there on the Twitters as well, but I find that the Tier 1 Alpha people give you the most important information and do it in a concise way. So let me just go through my little notes here, and then I'll let you go. I mean, you can go anytime you want. Yet I think this data is worth it. Okay. So let's check out the actual data from the home sales and see if our first point here has been confirmed or denied. The expectation was that those would be weaker, and we'll see if that was in line with expectations. Yep, so slight weakness there, and it was also expected that the Philly Fed Manufacturing Index would show improvement. That also happened, so really nothing on that front, really just kind of adding to the complacency, nothing to trade around there. I think one of the main things to discuss today is what's going on with we'll call them the 0DT levels. Keep in mind that this market is run by dealers, so it's probably really a battle of dealers and algos. I'm not sure if they're working together or who has the edge there. Probably the dealers. That's just kind of how this works. So what's going on today is we are really back near that zero gamma level. What does zero gamma mean? It means a lot of things. The most important thing it means is this is where those dealers make the most money. So something's really going to have to change for us to sell off, or have a significant squeeze like we saw yesterday. Right now we're up. We are nearing beyond the expected move, but really we're only up 17-ish points, 20-ish points near the high. So it's not this crazy move. So I'm not really expecting to see that huge squeeze again. Like we saw yesterday. I wouldn't even call yesterday a huge squeeze. It was really led by the mega caps as always, and the breadth. So the breadth did improve yesterday. If you're looking at it, the net change on like a comparing it to the day prior, but really just a mean reversion. So there's still not that massive strength going on under the surface that some people would like you to believe, especially some overweight bearded CNBC commentators. Not to mention any names there. Besides that, let's see. OpEx tomorrow, obviously expect super choppy action then, potentially choppy action the rest of the day. Again, we're near that zero gamma level. Dealers are just printing dollars at this point, and there's really no reason for them to move it significantly one way for another. So potentially choppy rest of the day. I am in a rare breakout trade, so those are about. I actually need to get the real probabilities on this. We'll say about 40% of the time it works. So just because I'm in that breakout trade doesn't mean that the breakout is even likely to happen. So just be aware there. And let's see. Besides that, there was at least one other point here I remember. So they talk about the breadth a little bit. Again, sorry it's so choppy. I usually write this beforehand. Yet I think it's worth getting the data, even if it's going to be choppy like the market most of the time. Let's see here. Yep, that's exactly what I just said. It's just for mean. And besides that, besides that, I'm going to end with just one point that I've been discussing quite a bit here, and that is if you look at the forces moving this market, dealers aside, zero DT aside, all the fancy Greeks in the background aside, it's led by the mega caps. It's led by the same stocks, the FANG stocks, and you're just not seeing that breadth. So yes, yesterday you saw an improvement back to a bit of a mean reversion in that breadth, but every bull market that I can remember in my 6 years of trading, but in my research as well, has began with very strong breadth, especially in that tech sector, and you just haven't seen that yet. So I think that's something to watch. Is it tradable? I mean, it's tradable if you are a value investor, I guess, or trading on a longer time frame. I don't know what strategy you would use. That's not me personally. Yet something again to keep in mind. Don't let anybody tell you that we're super bullish right now or super bearish right now because things just aren't aligned, and that's why you're seeing the chop. That's why you've seen this 7 week now 100-point consolidation. It's because there's still a lot of uncertainty out there. So just something to keep in mind as you maybe start to allocate more into longer term positions if that's your cup of tea. And yeah, that's all I have for you there. So a little bit long today. Like I said, I had an important phone call before the briefing today. So tomorrow's will be back to its regularly scheduled, nice and concise look. Maybe you liked today's longer look. Let me know if that's the case in the comments. That'd be cool. Or in a response to the newsletter. Besides that, I'll be on the Twitters as always at Routine Trader. And even if you didn't like the extra longness of the briefing, 1 second, Mr. Juiceball came in minute 50 of this today's briefing. Let's see if he said anything worth mentioning. I'll let you go check out his comments if you are so inclined. And hey, if you like any of Mr. Juiceball's comments, why not give this video a like to help with that YouTube algorithm? So I appreciate you watching, and I appreciate you, Mr. Juiceball, even for showing up when this thing's almost over. I will take all the engagement I can get. So we will be back tomorrow for Friday for OpEx. We'll see how the rest of the day goes. And I'm gonna sign off now and say stay classy until then.